Hello, everyone. Thank you so much for joining me today on this week's edition of Sales Boomerang University. My name is Spencer Schultz. Super excited to be back. Had a little bit of a bout with COVID. My apologies to those who wanted to attend last week. I was a little under the weather and wasn't able to. So today's going to be a little bit of a hybrid session. We're going to go through our 101 and our 201 in essence, and make sure that we're covering kind of the first two facets of the Sales Boomerang product. Going to be going through the old PowerPoint slide deck, whatever you like to call them these days. Please let me know where you are tuning in from in the chat. I'm here in Baltimore, Maryland, where Sales Boomerang is based out of. You can see I got some Ravens memorabilia here. Big day. They're signing Roquan Smith to a long-term deal, and the playoffs underway here. We got Yvonne from Colorado. Thank you so much for joining us, Yvonne. We got David from Maui. Wow, people coming in from all over as folks continue to trickle on in. Also, feel free to let me know, what is your position? Are you a loan officer? Are you a marketing executive or in marketing? Are you a branch manager? What your role is as well, so I know who I've got here and can cater this to be the best experience. We got some LOs, it looks like, as well. Fantastic, guys. Well, with that being said, again, going to be a little bit of a hybrid course here today, and going to be going through Sales Boomerang and how to become a retention rock star, guys. That is the goal of the Sales Boomerang program. We are going to show how you as an LO or as a lender or as a branch manager can become a retention rock star. We've got Tim, who's a branch manager in McMinnville, Tennessee. Got Courtney and LO in Alaska. Thank you so much for joining. Questions, throw them at me in the chat nonstop, guys. Love them. The more questions, the better. The more participation, the better. Anything that comes to mind. Let me know as well. Are you a 3, a 2, or a 1? A 3 is someone who's like, I've used Sales Boomerang. I know what it is. I feel confident there. A 2, I've heard of it a good bit or used it a little bit, looking to up my confidence. Or a 1, you're starting fresh, you're a blank canvas, and excited to move forward with our one-on-one today. We got Frank, who's in California, and he is a 1. Well, that's fantastic, Frank. So here's our syllabus of Sales Boomerang University. What the heck is it? We got Tim, who's a 2, Megan, who's a 1. Guys, we're looking at borrower retention. We're looking at how to make our pipeline more consistent and also quicker, adding 2 deals per month, adding 1 to 2 applications per week from the get-go. And guys, how can we look at our referral partner relationships and use Sales Boomerang to our advantage? We're going to be getting into all of that today. Again, my name is Spencer Schultz. I am a former mortgage loan officer myself, got into the data and analytics side of things and ended up at Sales Boomerang. We have David asking, can you connect MortgageCoach to Sales Boomerang? We are actually merged together as a company, David, and these 2 products integrate directly. You can pop out a Sales Boomerang alert into a MortgageCoach TCA, or have your Sales Boomerang alerts integrated in so you can see them in your MortgageCoach panel as well. We got Marjorie as well. Hello, Marjorie, an LO and a 1. So glad to have you here. But guys, this is my goal. My goal is not to tell you what sounds good in the make-believe world, and we're a tech company, and this is how we think the mortgage world operates, and rainbows and gumdrops and fairy tales. I'm here to not be the hero of the story, but to be the guide. I want to share with you the best practices of what actual top producers in the industry are doing. Top 100, top 1% LOs nationally. Jeremy Forcier, Shayla Gifford, guys and gals like that are closing 150, 250 plus million in loan volume each of the last 2 years. So let's get into it, guys. Again, we are one entity with MortgageCoach. We are together. And the reason we joined with MortgageCoach last year in 2022, which is weird to say now, but because we share these common overarching goals, guys. We want to make sure that every borrower, every homeowner is in the right loan at the right time. We want to make sure none of them get left behind. We, I think, as a society, are getting a little bit sick of the virtualness of these kinds of transactions, getting sick of kind of maybe the rocket mortgage. Okay, here's a loan, tap, 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 here's a loan. There is no strategy there. There is no value there in the long term. And we want to make home owners, not loan owners. We want to look at the long-term picture to help Americans accomplish their personal, their financial goals, and eliminate as much debt as possible to become debt-free and financially free, guys. So that is why we are together with MortgageCoach. So, guys, what does Sales Boomerang do for my ones out there? We are going to notify you, if you're a Sales Boomerang user, anytime someone in your database, which we're going to define, can buy, sell, or refi, or is in the process of buying, selling, or refining. We are going to send you an insight or an alert and saying, hey, David, Megan, Tim, Marjorie here, any of these people are actively shopping or could do this type of activity, we're giving you that relevant touch point, guys. We want to be relevant. We are past relying on random check-ins and, huge bulk email drip campaigns that are random and contain no kind of relevant information, birthday cards, those kinds of things. We're just waiting and sitting back and waiting for referral partners to bring us business. We are taking the head of the table seat with Sales Boomerang, guys. So we'll get a little further. Wanted to get in some fast facts here, guys, some other goals. So through being alerted in these processes, a key number here is 11, guys. Wherever you go, what Sales Boomerang has found is right around 11.1. If you read any kind of study, the average number of mortgage transactions that the average American homeowner does, right around 11, 10.6, 11.7, somewhere in there. So we like to think of 11. With these numbers, guys, Sales Boomerang's goal is two things. Number one, we want to increase that number. We want to help borrowers strike every time the iron's hot. We want to turn that into 13, 14, 15 times. Number two, we want to help you retain the remainder of those transactions wherever you enter. Maybe it's a first-time homeowner, first-time home buyer. We want to help you get those 13 or 14 transactions. Maybe you enter at that third purchase, that HELOC, kind of midway through that cycle. But we want to create a long-lasting relationship that is dependent on personal relationships, goals, and relevance in the market and to that individual or family as well, guys. And with that being said, we integrate into your technology already. We are capable of integrating into any CRM, into Encompass, into everything that is offered. Simply put, guys, we can push these to where you're already working. A lot of you on this call, if your lender is already subscribed to Sales Boomerang, we probably already are. These are a list of some of the CRMs, the popular ones that we are already integrated with, guys. And automation is a key here. And when I say the word automation, I don't mean this tech process that you have to learn. I mean that you can sit back and have this system do the work for you. I'm going to give you a little brief look ahead to the long-term idea or philosophy of what we want this system to be for us, guys. We want this system to identify within our database, here's who's shopping, here's who could be, send that information directly into our CRM, have that CRM generate for us an automated MortgageCoach TCA or an automated video presentation or an automated text message to that borrower, letting them know specific to that relevant point, which we're going to get into the products. But long story short, the system kicks that message out, kicks that video out, kicks that TCA out. And the first time that you're speaking with this, former borrower of yours or potential borrower of yours, they could be credit qualified. They could be interested and ready to execute a transaction. We are trying to eliminate all of the noise and make this process easier for you as an LO and streamlined. Less meaningless conversations, less communication back and forth, emails, all of those kinds of things, and making this a streamlined process. I like to think of it as a hydroelectric process. We get our pipeline working through Sales Boomerang. It's going to keep on spinning that wheel as we add new borrowers to our database. That wheel's just going to spin. It's just more water and it's going to keep spinning. So with that being said, what is our database, guys? Let's never limit that to, I've got my past borrowers, or, we work consumer direct. We're working on prospects. We get lending tree leads. Your data is your dollar. This includes your previous turndowns, guys, those who are not credit qualified or not quite ready yet for whatever reason, they can't. This includes those that you're actively working with in your pipeline. Guys, this includes your referral partners and their databases, as well as prospects, as well as your past clients. With Sales Boomerang, the minimum requirements in order to be able to monitor and use this system, guys, name, primary address, and contact information so you can get in touch with them. And with that being said, we're going to talk about referral partner relationships with this, guys. But let's say, for instance, you're looking to show value to a potential new referral partner. You can tell them this. And this is something that happened quite some time ago. I've been in this position for a year now. And I went back and I was doing an in-person training. A branch owner raised their hand up during a presentation. Was like, Spencer, can I add something? I was like, well, sure. You own this branch. You could kick me out if you want. You can do whatever you want. But so he said, hey guys, I'll tell you what, why don't you have these referral partners, these realtors, are you sick and tired of going to open houses on the weekend with them and doing all of that? Why don't you have them take out their iPad, take down name, address, primary contact information. And we can then monitor them in Sales Boomerang for activity. We can do that, and we can give that to that referral partner as well, as long as it is, public information as a result. We'll get into all of those kinds of things. But simply put, able to increase your database through just simply having people at an open house put down their information. You can do that for a referral partner. You can have a MortgageCoach TCA that can be a QR code that's on a little TCA handout on paper at that open house, guys. There's endless possibilities to this system, but long story short, our data is our dollar. Don't leave behind any of the deepest, darkest corners. We want the entirety of our database to make sure that we are leaving no borrower behind. And this is a brief visualization of what Sales Boomerang is going to do, guys. We're going to turn the lights on in your database. This is what most lenders and realtors databases have looked like throughout time. All these people, we've had our past closings and our previously funded deals and all of those kinds of things. And we contact them randomly. We check in, we hope they come back, leave us a review on Facebook, whatever, even dating way before Facebook. We hope that they, had a good experience. They remember us. We try and check in with them again, give them a phone call, send them letters, send them an NFL team or a college team schedule and all of those great things that do help. But it's a little bit random. And this is what Rocket and Zillow have, guys. They get the insight. Okay, this person's shopping for a mortgage. Okay, this person listed their home. We are going to drip on them as much as we can. If you've gone through a transaction lately personally, as soon as you, list your home, as soon as you refinance or have your credit pulled or something, they are on you like flies on what. They are mass communicating with you. And where we're going to go further is the strategy, guys. Again, we're looking at the long-term picture through Sales Boomerang. And I want to talk about setting expectations. We're going to get into each of these specific instances that you see, but this is something that you should be proud of with your borrowers. This is something that you want to let them know about, that you, Tim, Megan, David, Marjorie, everyone here with us. We got Courtney, we got Frank, we got Yvonne. When you are closing someone, when you are working with someone, let's say it's a first-time home buyer or maybe someone who's just purchasing or doing a refinance, you let them know, we, all of you in this, have the best borrower retention program in the country. You have Sales Boomerang, so you do. And you don't have to explain what Sales Boomerang is. You can if you want, but you don't have to make it that complex. You say, hey, at XYZ lender, at SB lender, we care about you becoming a homeowner. We care about the next loan. We want to make sure you accomplish all of your goals. You are going to hear from me again. Our system notifies us anytime you could benefit from your position in your home, from your position in the market, or from a new product. This is not the last time you're going to hear from me. Then, guys, we want to project the next time. Maybe it is a first-time home buyer. Do you think they're going to be able to do a rate and term in 12 months when, rates go down? Do you think they're going to be able to take off mortgage insurance? Whatever it is, guys, prepare them for your next prediction, because your system's going to let you know. Your team, you can say, is going to let you know. You can be proud of this. When you set that expectation, say, hey, we want to separate ourselves from the Rocket Mortgages of the world. We care about you long-term, getting Johnny and Janie in college, making sure that, you're able to move to that area that you wanted to retire to, accomplishing all of those goals. And we'll talk about being, a consultative LO, all of those kinds of things, guys. But that is imperative. The expectation that you will hear from me again, because, guys, 82% of your borrowers are currently leaving you every year, according to Black Knight, one of the top AVMs in the country. 4 out of 5 borrowers are leaving. They are doing a transaction with 4 out of 5 times someone else. And that number coincides, guys, with 77, just about 4 out of 5 again. Those numbers are pretty close. 77% of borrowers are going forward with the first lender they speak with. There will be a recorded copy of this meeting, Drew, we have here in the comments as well. No worries at all. These are all posted on salesboomerang.com as well as to our YouTube. You'll receive an email, Drew. Thank you so much. So with that being said, guys, 4 out of 5 borrowers are going with the first touch. This is according to the CFPB. This is coming straight from the source. You can see right below that, almost the remainder, 18% of that 23% are going with the second borrower. So I don't know if Ricky Bobby would like this very much, guys, but if you can't be first, you better darn be second. But let's talk about being first. If you are batting 77%, you're going into the Hall of Fame in MLB. If you're throwing 77% completion rate, you're going to the Hall of Fame in, the NFL. Basketball, you're shooting 77%, all the sports euphemisms, guys. If you can be first, you will win as an LO. How do we be first is something I want to talk about. Do we be first? Do we become first or get there first by, hoping that when they have an activity, they come to us? Are we reactive? Is that how we're first? We are reactive through that same expectation setting, guys. We need to have the conversation before the market change happens or before the borrower gets to that next step, whether it's, upsizing because they plan on starting a family or, an empty nest and they want to move out. We need to have that conversation before it occurs and set the expectation, and Sales Boomerang will be the reminder for you with relevant information. So you must be first. And if you can't be for whatever reason, you have to be second. That is imperative. And that's the goal of this system, guys, being first. And this is an example. So this is a real borrower. This isn't a picture of her. It's kind of a stock image, which I think is kind of creepy. But anyway, so this is Alice. We have an LO that is based in Maryland. He's been in Maryland for years. And, we like to, riff with him, go back and forth. He's a real character. And he's like, oh, you guys think you're so smart at Sales Boomerang. I've been doing Sales Boomerang since the 80s. I've been doing this myself. This is nothing new. And he's right. And we were like, well, could we talk, Sam, to one of your borrowers by chance? Do you have any that like to chat and, network maybe? And he was like, yeah, I've got a couple. So he sent us Alice. And the big takeaway, guys, to save some time on this, the big takeaway was us asking simply, why did you stay with Sam, this one LO, this entire period of time? And she told us this. Well, I didn't want to pay rent anymore. And I was looking to have a place of my own. I always wanted to, own a home like most people do. And so my parents, paired me up with a realtor friend of theirs. We started looking, and then they paired me up with Sam. The all too common story, guys. That's how it happens. There was a realtor, they paired me up with this LO. And the essence of why she stayed with Sam was because she said that, life would happen. She would tell Sam, well, I wanted to buy this home. He asked her some questions, what's your goal? She said she didn't want to pay rent. She wanted a place to call her own. It wasn't somewhere she wanted to live forever. She just wanted to get the process started. And she would tell him things like, oh, planning on getting married and starting a family, looking to upsize now. So she would come to Sam sometimes, but she said probably 70 to 80% of the time, by the time she ever heard, oh, rates are down, you can save monthly. Oh, someone that she knows would say, oh, she would always be the first, basically. Oh, I could tap into my equity for this project or for this business. Oh, I could, upsize and, do this transaction. She said Sam had already let her know every single time. Sam was first, guys. And I like to think of that relationship, that lifelong relationship, which, she's just sold her home again. She's looking towards retirement, she said now, all of those things. But if you get, let's say, one Alice, how many leads, how many referrals would you trade for one lifelong relationship like this that's going to net you? You can do the math on the side here, calculate it in your head as we always do. What's the commission? How much am I making? How many transactions? All of those things. Now, let's say you could get 50 Alices as one single LO. How much would you trade for that? When you have 50 Alices, guys, that are lifelong relationships with a borrower where you have asked questions, their next move, you're sending them relevant information ahead of their next move, preparing them to strike. Guys, you're going to have a pipeline that is so consistent. And again, that hydroelectric, that pipeline doesn't really care about the market or, oh, well, now it's a refinance market, or now it's a purchase market, or now we need to focus on debt consolidation. That pipeline is based on borrowers' goals. Alice needs to move. Alice needs to do this. Alice needs this transaction. She needs to move for work. Life happens. You are the mortgage expert. You are that guy or gal in the industry, their best financial friend in the industry that can help them through that. If you get 50 Alices, 100 Alices, you're going to make a lot of money and you're going to help a lot of people. Those are the two pillars to me of being an LO, from what, every successful LO says. They love it because they make money and they help people accomplish their goals. So with that, guys, let's dive in here. I think I might have skipped one little slide here. Nope. All right, that's fine. So let's dive in. In that same sense, that essence of being first, guys, we have the proactive insight versus the reactive insight. These on the left-hand side, these 8 alerts we're looking at, these are being first. And that's what we want to talk about again. This is opportunities to be first versus, okay, hey, we've got our reactive insights here that are going to allow us to be second and see when a borrower's shopping us and see all of those instances. This is covering that 95% here. What I don't want you to do before we get into these specifically is typecast these alerts. You see here cash out, and you might think, well, we don't do cash outs, or I don't really like how those pay me, or I'm not really worried about that right now. All of these alerts, guys, are for every loan transaction. Every single one. Equity can be for purchase. Listing can be for equity. All these are doing, let's say here, we've got Tim here, or anyone else. Let's say we got Megan, Tim, Frank, anyone who's chimed in the chat. Let's say this hypothetical. Let's say that I hypothetically know nothing about the mortgage industry. I am just your friend that, we went to middle school together. And let's say, we live in the same area still. We've been friends for 20, 30 years. And I happen to know that, my other friend, let's call them Sarah, my friend Sarah that you don't know. Yeah, from work, is really confused. She keeps getting, all this information about her equity. She keeps, seeing, you could take your equity out. You can do this. She really wanted, she was thinking about maybe starting a business and getting that, using that as kind of a little Kickstarter loan. But she's just really scared. She knows rates are really high. She's not sure what to do. I tell you that information. We're at the bar. We're, eating nachos, having a beer at happy hour, catching up. I tell you that information. If you're an LO, what is the most basic thing that you want to do with Sarah's information? If I were to tell you that as a friend, my friend Sarah isn't sure what she should do with her equity. Someone in the chat here for me. What would you do? The most basic instinct you get as an LO. Well, I'll go ahead on through. But the most basic thing you're going to do, you're going to call Sarah. Say, hey, what's her number? I'd love to give her a call. I'd love to ask her a couple questions. Just because it's about equity doesn't mean that's all the conversation has to be about, guys. It can be about anything. So don't typecast these. Use these as a doorway, not as a house. Use these as the relevant insight to get you to that conversation and establish trust, as opposed to this being the, end all be all. Okay, I've got an equity alert. I've got to talk to her about equity. If she's not interested, there's nothing else to talk about. Don't typecast them in your head. You're going to limit yourself in that sense. So we're going to go through here. Usually in the 101, we do the tier 1 and then talk about some basics afterwards. Then we're going to do the tier 1 and the tier 2 today, guys. So tier 1, these are going to be non-credit. These are going to be one instance that you're getting, one relevant piece of information that's going to get you in the door. This is a wide net. These are going to be, if you're turning on Sales Boomerang for the first time, you will see all of these at once. This is a look. This is a flashlight into your database to every single instance. It's casting the widest net, guys. These are our cheapest alerts, most frankly. They're just one instance to show you the best value. So with that, there's equity. Equity watch, guys. We are going to look at home value. We use Black Knight and 2 of the top AVMs in the country. We have our own aggregate. So you can enter, okay, show me, think of it like Google, guys. All right, show me everyone. You type in everyone in my database who has at least a $350,000 home value. Then the equity aspect. Show me everyone who has at least 25% equity position. In other words, a LTV of 75% or lower. Blammo, there you go. And that's going to show you the home value that you want to see. It's going to show you the equity position. It's also going to show you the tappable equity position. So obviously we can't eat up, 137% of our equity. How much could they actually take out? It's going to do the math for you. So you can say, okay, here's the amount of equity you have, and can go through those conversations. Hey, use your equity to do a construction or renovation and create more equity. Hey, consolidate debt. Hey, move up, move down, all of those kinds of things. Equity, guys, you know what it is. Borrowers know that they have it. They're aware, but this is going to give you that relevant touch point just to try and be first. To make sure, okay, I can then send out a MortgageCoach TCR. I can call this person or send them a text and say, hey, was doing an annual mortgage health review of your file, which is a free service that every single person here, I'm sure, offers, and every lender does. You can set that expectation. You're going to hear from me at least once a year for a free mortgage health review to make sure you're in good shape, and say, hey, here's your equity position. You update them once a year. Here's your options. Ask them a couple questions and see if there's any transaction that meets or project that transaction when it's going to occur. So that's equity for you guys. Again, tappable equity is shown. The next one, listing alerts. Listing alerts are going to show every single person, for sale by owner included, every single zip code in the country within 24 to 48 hours of the listing alert, of the listing being posted online. So if the listing hasn't been put on Zillow and Redfin and all those kinds of things, you're not going to have it. So occasionally it doesn't go online for a little while, and someone will be like, oh, I listed my house weeks ago. I've already been pre-approved, all of those things. It's because they haven't posted on the internet yet, but that doesn't mean you can't still win. Let's say, guys, you get a listing alert on Joe Smith here in Tempe, Arizona. Who's the first person you should call if you see this listing alert on Joe Smith? I'm calling the realtor first. I'm going to look up that listing agent and I'm going to say, hey, this is Spencer with, Sales Boomerang Lender. Just wanted to say congratulations on, listing Joe Smith's home for sale. Maybe this is a realtor you've worked with, or maybe it isn't, but you can say, hey, I spoke with Joe back in 2020, or I worked with Joe, got him into an FHA back in, 2018. Just wanted to let you know I plan on giving him a call, make sure he understands his buying power, is set up for the best success financially. What does the realtor say back? Oh, thank you so much, Spencer. They're probably curious. Hey, how did you know that I got this listing? Did you see online? Whatever it is. Oh, no, I actually saw, because we have a system called Sales Boomerang. It shows anytime someone can or is going to buy, sell, or refi. What do you think we hear back 95% of the time? And I'm going to share some webinars and some other links here to our YouTube page with, again, tons of top producers. But they say, wow, how can I get access to that? Simple. You have to work with a Sales Boomerang LO. You can provide this information. You're a data-driven mortgage advisor that has an awareness of everyone that they've spoken to or is working with, because you see all of these opportunities and instances. Who else would a realtor rather work with? They'd rather work with someone who kind of just, sits there and waits for inbound business and, gives them the vanilla, FHA 30-year or conventional 30-year breakdown and sends it on back? Or do they want someone who's creative, someone who's on top of their database, and someone who can provide value? So they should work with you. Guess what you've also done now? You've established trust with that realtor that you can then transfer to the borrower. Then you can call Joe Smith and say, hey, Joe, this is Spencer at SBU Lender. I'm an LO that I actually just spoke with your agent and was going to give you a call to go over some things, make sure you're in the best situation possible, compare numbers. If they've already been pre-approved, guys, it might just be Rocket. It might just be that they went into their bank. It might just be, their parents' friend who's an LO that, gave them the run-of-the-mill numbers. Just because they might be pre-approved doesn't mean that they can't benefit from the conversation with you still. So it's your job to provide that value and make sure that you are able to show them their options, multiple options. That's how you win when someone else is with another LO or with another lender, showing all of their options, encouraging them to shop with you as opposed to shop you. And with that being said, we'll get to MortgageCoach TCAs and how they do a great job of breaking all of that down. But ultimately, guys, you can look at that side. Hey, they're selling. Guess what they're also probably doing? Buying. Where are they going? Oh, you're going to Scottsdale. I know a realtor in Scottsdale. Have you made any offers yet? Or are you, still in the process? Let me pair you up with this realtor. 2 for 1, 2 birds, 1 stone in that instance, guys. So listing alerts are great tool for referral partners, great tool to be able to show that value and, again, enhance those referral partner relationships. The next one we don't need to spend a ton of time on, guys. It's simple. We have a rate watch for you. So you will see in your database everyone who could refinance, simply put. And this is not, okay, Joe Smith has what are rates right now? 6.25, 6.3. Okay. If Joe Smith has a 6.5, do I want to be alerted when I'm offering 6.3? No, it's not going to save him money. It's going to be a loss for him. But if he has a 7, if he has a 7.3, I want to see that. I want to see that actionable difference. So there is what we call a delta or a buffer that's going to show, okay, Joe Smith, based on what you're offering, and guys, these integrate with Optimal Blue. You can choose that. These can be specific to your branch. These can be specific to your lender. These can also be customized at any time for FHA, VA, jumbo, conventional, all loan types, basically. So, all right, hey, we're offering 5.5 a couple months from now. Show me everybody who's a 6.4, someone that I could actually get that conversation started with. And what I would say about that, which is a little further and a little more advanced, I suppose, we are trying to get a 101 and a 201, so bear with me. But if, let's say, a lot of people are closed in the 6 to 7 range, as over the last 6-8 months as rates have been higher, where do we want to be first? Do we want to be alerted when they get to a 1.5 point difference? Or do we maybe want to see when there's a 0.75 difference or a 5.25 difference, right around half a point? That way we can get the conversation started before the rates are actionable. Again, we want to be first. If we are waiting until rates have dropped and Essentially there's going to be a long line of lenders lining up in that refi environment. So preparing your database, preparing your borrowers for that instance is key. They remember your name. They remember your number. You've gone over projections. Here's what it looks like if you wait until it gets to 6, to 5.5, to 5. Here's when we think that happens. That is how you shop with a borrower instead of the borrower shopping you. Prepare them for that instance, and you can make them confident in their decision. You can eliminate all of the room for error. They've already got their guy or gal in the mortgage industry. That's you, who has gone over the information with them. So don't need to spend too much more time there. But if you have any questions, let me know. Simply put, guys, we're showing you when someone can refinance. If you do HECMs, or specifically refinance HECMs, guys, we can do the math for you based on the conversion chart, based on their age, their equity, and their home value, who is eligible for a reverse mortgage. Guys, you're a one-stop shop with Sales Boomerang. You can, and if you don't like HECMs or you don't know about them, you can refer them to someone, but you can talk about retirement planning. This is another tool that you offer. Now, this is something you've got in your tool belt. When you're having conversations about, Tim, Drew, Marjorie, why you're the best LO, it's because you're looking at the full picture. You're looking at potential retirement options down the road for them, because that's the goal, right? Move to the beach or move to the mountains or move closer to your grandkids, retire, sell the house. A reverse mortgage is a possibility. Plus, I think about 50,000, 49 to 51,000 HECMs are done annually. There's a couple million now over the years that are being refinanced. So it's another tool. If you do them, you do them. If you don't, you don't. But you can add that to your tool belt. I've got retirement options in my pocket for you, Mr. and Mrs. Borrower. Tier 2 here, guys. We're going to be looking at our reactive alerts, that 1 in 5 that we want to increase. That's how we see that instance. We can steal away from the vanilla Rocket Mortgage or the local bank or whatever the quick shopping that so many people do. And guys, I want to kind of nip this in the bud. Most borrowers, when they have their credit pulled, especially refinance or debt consolidation, those kinds of things, they're acting out of fear, right? And Jeremy Forcier of Cross Country Mortgage does a great job getting in. I'm going to share a couple webinars at the end here, but a lot of times it's acting out of fear. They have concerns. They have questions. They aren't getting answered when they go, find me a mortgage. Okay, here's a mortgage. All right, I'm going to go with that. I'm stressed out. Okay, pull my credit. Yep, boom. Then you get alerted within 24 to 48 hours. So with that, guys, mortgage inquiry is not showing you when someone applies for an auto loan or a credit card or, a motorcycle. It's showing you a mortgage transaction and that borrower had their credit pulled in the last 24 to 48 hours. We actually segment these into 4 codes because when you have your credit pulled, it gets segmented so that the bureau can define what the reason for the credit pull was. We work directly with TransUnion, Equifax, and Experian. We do not work, through Credit Karma or some app or anything like that. We're using their, homeowner models directly. So you'll know, okay, not only is this borrower credit qualified, so we can skip that big step. And guess what we don't have to do in the first 2 minutes of the conversation? Pull credit to know that we're not wasting our time. That always throws up the fight or flight, right? Even though borrowers can pull their credit up to 8 times for the hit of 1 in the first 45 days, which is something we need to remind them of. Guys, they are immediately, you've had this conversation. If I'm shopping for anything and someone wants to pull my credit, I'm in the mortgage industry. I know that it won't hurt me if I'm shopping with a lender, multiple lenders in that period. Someone says, let me pull your credit. My fight or flight kicks in and I go, whoa, 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 whoa. I'm like Lee Corso in college football. Not so fast, my friend. We don't have to do that off the bat. We aren't wasting our time. They are credit qualified. Number 2, again, the segment. So I know you can see here on the right-hand side of the page, inquiry was made for a home equity loan or a line of credit. So now I know that person is looking to tap into their equity. Number 2, likely purchase activity. So I know that they're looking to buy. Number 3, first-time home buyer, meaning they're looking to buy and there's nothing on their previous mortgage history, public data online. Or number 4, a general inquiry, which means something that falls through the cracks or the bureau couldn't identify for some reason. So I know that in the last, yesterday, most of the time, these alerts come in at 9:30 a.m. every day. So just from the previous day, the bureaus push them on over to us. I know that yesterday, a credit qualified borrower was looking to do this type of mortgage transaction. Who would you rather speak to first thing in the morning when you have your coffee? Maybe you're getting ready for work. If you work from home or if you're going to the office, grabbing your coffee or dropping the kids off, you see, okay, I've got this Sales Boomerang mortgage inquiry alert. that's who I'm going to talk to immediately. Because again, guys, remember, being second is imperative in this situation. Rocket Mortgage is going to be all over them. You've got to be the next one to have that conversation. So you can then give them a call, say, and you can cut this quite a few different ways. And we have all of these scripting and approaches mapped out. Number one, again, we're talking about setting expectations again, guys. You can say, hey, we have free fraud protection. We do an annual free mortgage health review. We're going to know when you can benefit from your position in the market or in your home or both. We do free fraud protection. If you set that expectation, we do free fraud protection. We make sure, you can verify if you've had your credit pulled that it was you. Then you're just doing that. You're just calling. You're just saying, hey, Joe, saw you had your credit pulled, wanted to make sure that was you, told you we had free fraud protection. Oh, it was you? Okay, well, in that case, what were you looking to do? Drew, we've got in the comments here, I'm told my pre-approval application in Encompass needs to be closed in order for this credit improvement tool to work. So that is something I'm going to get with your customer success manager. I'm going to look at that a little further when we're done here, Drew. Thank you for asking that question. So with that being said, guys, if that borrower does say, oh yeah, I did have my credit pulled, you can list out, and I'm going to try and find this specific webinar here, guys, but you can list out, oh, well, what were you looking to do? Were you looking to refinance? Were you looking to purchase? Were you looking to finance, a purchase? Were you looking to tap into your equity? You can basically list out everything that you offer as a lender. And then you can say, okay, we do that here at this lender. Pardon me. I'm trying to find this webinar. My favorites page is being a little wonky. There we go. Okay. So we've got Jeremy Forcier, who did 250 million in loan volume, guys. I'm going to drop this in the chat. Last year, he's on pace for, I think he finished with about 185 in loan volume in 2022. So again, absolutely killed it this past year, but he has his direct approach. That's what he does. He goes and says, I'm going to list out every single possibility that this borrower had and make sure that they're aware I offer those same services. Then I'm going to try to compare multiple products through that MortgageCoach TCA and show all of their options. He wants to lift the veil off of the situation by, when you use that one example, okay, this borrower is looking to do this one thing. They basically have the blinders on. They're looking at that transaction isolated, as opposed to, okay, well, you could do, a 2-1 buy down, a 3-2 or a 2-1-0. You could do a 10-1 arm. You could do a 30-year FHA. You can list all of those side by side and shop with the borrower as the consultant, as the advisor, so that you can find the best solution together. So that's the approach there. But he'll kick out the automation. So he'll send the MortgageCoach TCA. He'll also do a call, a text, an email. All say the same thing. Hey, saw you had your credit pulled, wanted to make sure it was you. If it was you, hey, let's make sure if you're looking to finance a purchase, if you're looking to tap into your equity, if you're looking to upsize, if you're looking to XYZ, that we find the best solution for you. Want to make sure that you have all of your questions answered. I've set aside some time for you tomorrow. He always gives them a hard deadline, which is something I really like as well. He tells them when they're going to talk, as opposed to, what's a good time for you? That requires them to say, oh, well, I already worked with this other lender. I don't want to look at my schedule. Say, hey, set aside time for you tomorrow at 12. If that doesn't work, shoot me a text. I'll call you tomorrow at 12. So setting that expectation. We are, again, expectations. We are going to talk tomorrow at this time. So with that, guys, a lot of times borrowers are scared and have questions. A lot of times it was just the first lender that they saw. They were acting out of fear. They're looking to, I want to make sure my screen share is working here. Okay. So a lot of times, again, they're acting out of fear. They have questions. You can be that light in the dark for them to take them through this situation. And hey, guess what? Maybe they did go with Rocket, and Rocket's has some special product that's 2 points better than yours. And if you were them, you would take that. That's okay to tell them that, because you're looking at this long-term relationship. You tell them, hey, that's great. You should do this. And I bet, probably about 18 months after that, I could do this for you. So I would, if I were you, I would take that and go through. If you're not going to beat them and you kind of can tell the borrower knows that, don't try and, pull them to pay higher interest or pull them to do something when the other guy's got you beat. Tell them that's fine. We're going to do this next time. Here's the next step. This is great. I'm really excited for you to be able to do this. This is a great option. Then again, you can come back. They're still in your system. They're still your borrower. You're going to be looking for them again. So with that being said, guys, the credit score, we're not going to know the exact score because this is never going to be a hard or a soft pull. So if they're an Experian consumer and get the report, nothing's ever going to be on there. It doesn't hit their credit. What the bureaus give us is a tier. So we're going to see, okay, this borrower, if I need 620 for any of the FHA, VA, conventional, any instance, you will only see 620 and above. So I would see not 627, I would see tier 5. If I want to see 720 and above, I will see tier 2. So it'll say T2, T1. So again, they are credit qualified at the time, and you'll get that estimation. With that, you can probably estimate DTI. You can cater these alerts, these credit alerts, to show you different instances. Someone who's got a 640 plus is a lot different than someone who's, 620 to 639. Excellent versus, fair or, not great. So in these situations, all of it. And then same thing, guys, early payoff is just think of it as mortgage inquiry over the first 180 days of a newly funded deal. So if you close Joe Smith let's say you close him today at 633, and then 4 months from now, rates have, dropped. I think they're not supposed to that much until a little after that. But let's say hypothetically, rates are in 475 all of a sudden in April. He gets his credit pulled. You'll see this as an early payoff. So this is like a high priority mortgage inquiry alert called an EPO. In our system, it comes through as red and highlighted, and it'll be pushed first. If in your CRM, you're going to want to keep an eye out for these, is what I'm trying to say. So make sure that you keep a priority on these, and you'll get this as soon as the credit is pulled, as opposed to getting that, invoice 3 days before funding that, they're going elsewhere. You have to pay a fee because, whoever you packaged it to, is displeased in that early payoff period. So these, to be honest, Sales Boomerang doesn't really make a lot of money off of these. We don't generate a ton of EPOs in the grand scheme of things. This is a service for you guys so that you can save those fees, save those invoices, and make sure you stay ahead. And from what I've heard from all the LOs I've spoken with, honesty is the best policy. They say, hey, saw you had your credit pulled, same deal, wanted to make sure it was you. We just worked together a couple months ago. They remember you. They know you. And they say, yeah, I did actually. It looks like blah, blah, blah. Of course, you want to try and win. Well, we can do this. We can offer this. If you can't beat them, then, let's say it was 4.5 months in and you need 180 days. They'll say, hey, are you planning on closing this in the next, 30 to 45 days? If you do, we're going to incur a fee. This is going to put us behind the 8 ball. And a lot of times borrowers will let you know or be willing to say, yeah, no, we're not, it's not urgent. We're not in a huge rush to do it, but, absolutely. So honesty is the best policy with those from what I've heard. It's not like you want to be deceptive anyway, but saying, hey, is there any way you could wait past this, 45-day mark or, this 30-day mark to make sure before you close out? The next one, guys, credit improvement. We did have a question in here, which I'm going to try and get to after this, but credit improvement, simple duality here, guys. Your turn downs are no longer turn downs, or excuse me, they're no longer turnaways. They are just a turn down for now. So with that, you take the role of the advisor again. You can pair them with many of the free credit repair tools. There's so many great ones nationally. They can get an agent, help work on it. But you can basically say, okay, unfortunately, looks like your score didn't come in where we needed it, and we're not going to be able to get you funding, but work on these 3 things. Hey, looks like you got a couple inquiries coming off. Your utilization, you said should be down soon. And I'm going to give you a call the day you are credit eligible again. I'm going to give you a call. You just worry about it. You don't need to check. I will check for you. My system will automatically notify me, and I will keep checking for it. So then you're just the good news delivery man. That day comes, you say, hey, Joe, congratulations. You did it, man. You got your credit back up. Great. It's a great feeling when your credit, goes from maybe a not so great place to somewhere where you wanted to do that big thing. So many people go through that in their 20s and into their 30s and all that good stuff. All the time it happens when you're 50s. But so, hey, Joe, today's a good day. Congrats, man. Great job. Were you still, trying to get that place in Scottsdale? Were you still trying to go towards, Phoenix? Awesome. Well, hey, let's get you pre-approved and show your buying power. So there's the one aspect. The other one, guys, could be, hey, all right, I'm looking to see people who maybe were a 660 and now they're a 740 plus. I closed them in 2019 at a 660 or 2020 at a 660. Now they're well above a 740. Awesome. They have a different set of products. They probably have a different set of options. They could consider diversifying, their asset portfolio through an investment property, or they could consider, passive income, all of those kinds of things. So you can look at credit improvement two different ways, my friends. So with that being said, that's kind of all the alerts. Next week, we're going to touch on the prescriptive scenarios in 301, which are the most advanced in the industry, guys. Super excited to go through those with you. We've got some video content on those already on the website and on the YouTube, but definitely we'll be getting into those next week. The things I want to go through, again, we do integrate directly with Mortgage Coach, guys. And the key elements that Mortgage Coach allows, and what, if you're not using Mortgage Coach, you need to be doing these anyway. Some of them you can't quite do, but guys, we're looking at cost and savings over time. We are breaking down what this looks like 5 years from now, 15 years from now, how it impacts in terms of how much interest is paid out, how it impacts in terms of net worth over time, and being able to compare that. You can see here in this TCA in the middle of the screen, look, the 15-year interest and MI paid in the current situation versus a 30-year fix versus a 15-year fix. Savings over 60 months, monthly payment savings. The 15 year is going to cost you monthly. The 30 year is going to save you a couple $100. Guys, you can add personalized video content. Video is king. These presentations are king. Gen Z is becoming homeowners as we speak, guys. Crazy, I know. But how do they consume content? How do they learn? They grew up on laptops. They didn't have books and notepads and things of that nature. They had their Chromebooks and all of those all through school. They want to learn or be informed through a TikTok. They don't want a fee estimate sheet and a long email that they can work through. They want someone in bright colors to give a breakdown. They don't want the what looks like you stumbled into the back of Bob's Discount Furniture, guys. They want a visualization that gives them their options side by side. These are the three things that you need to be doing to help make these lifelong relationships. Again, we want to encourage them to shop with us instead of shop us. The more options we look at side by side, the better. That way, they can choose from anything that is available with us, as opposed to, yeah, you could do this. And then they end up hearing the other two options from another LO. Have to take the time to compare multiple loan options. Guys, cost over time. How do these match up with someone's short and long-term goals? Is someone looking to retire sooner? Let's look at different options of terms. Is someone looking to, reduce their monthly payment as much as possible? Right now it's just really tough for them. Okay, we need to choose the option that's going to go that way. Then, hey, we always need to be considering, how do they become an outright homeowner? How do they become debt-free or financially free? When do those points happen in these transactions? What is the long-term strategy? What are the next few transactions to get there? Let's lay down that roadmap for them so that they have the long-term plan. It relieves stress. It'll keep them with you and make sure that they are accomplishing their goals with a blueprint from a professional mortgage advisor like yourself. So again, here's a more advanced breakdown of a Mortgage Coach TCA. This example would be going through, okay, here's what you're currently in versus getting, doing a cash out into a 30-year at 3.125, a little dated on the rate there. Some lenders are offering some crazy stuff right now. But anyway, hey, here's what it would look like if we reduced your terms, adding another $500 extra to the principal payment. Hey, here's what it would look like if you wanted to, take out an investment and use that money for that investment. You can see in the side here, what speaks to you. The red and the green here, you can highlight throughout. You can highlight live. You can do this interactive. You can do this on your phone. There's an app for it. We had one where someone was doing it from a ski lift and took a video of them doing a Mortgage Coach TCA with a borrower from a ski lift, which is hilarious. But ultimately, hey, the monthly savings, anything you do here, you're getting $1,100 freed up. Awesome. Hey, here's the impact over the next 60 months. If over the next 5 years, you're really looking to maximize savings, here's that principal reduction. If you're looking to the long term, which of these speaks the most volumes to your net worth over the next 15 years? Here's going to be $138,000 more through that investment to your net worth than what you're currently in. Based on resetting the terms, it's going to impact your net worth. You're going to pay more interest over time and obviously, have that payment for longer versus, hey, all right, the principal payment's going to put money into our net worth as well, saving that money on that interest payment. So with that, you can break down the sum of all debts. This is how we stay relevant regardless of rates. Guys, if their debts are totaling a $1,700 payment, but they have a They have something in their mortgage they don't want to move off of. Well, if you've got credit card debt at 22.73% interest, and that payment, as opposed to consolidating it, is $400 higher, the sum of all of your debts is the payment, not just your mortgage. Examining the full financial picture here and saying, hey, over the next few years here, you're saving 25 grand. Then guess what? We can refinance you later into a lower rate, get those debts out of the way. There are transactions to help in these situations. You can break them down with them, guys. The thing we always want to consider, the proactive versus the reactive guys, the cadence we're about to look at as well. But again, text and video are winning. The conversation rates among lenders that we work with, we have some that send out videos that get an 80% response rate. Text is going to quadruple, quintuple, do 50 times better than email and phone call. Again, Gen Z, if you've got a kid who's in Gen Z and you try and leave them a voicemail right now, they might text you back like 3 question marks. They don't like to talk on the phone. They don't like to go work through email. They want video. They want text. That is the new mediums of communication in today's age. And guys, we need to consider our cadence. This is what a mortgage inquiry should look like in terms of text message, email, phone call. And we also have an FOC letter here, guys. So I do want to specify for any credit alert, there will be a firm offer of credit letter sent out, which is basically a call to verify pre-approval that says, hey, we have pre-approved you for a loan. You must, it basically says, you must have these certain things. You can't say you might be qualified or you could be, but this comes directly from your lender. This does not come from Sales Boomerang. Sales Boomerang never speaks directly. Tim, I appreciate it. I appreciate the comment there. Dave Savage is the best. I get to work with him all the time. He's such a positive and insightful guy. But the FOC letter, guys, so if you work at ABC Lender, 10 days after that alert, Joe Smith will receive your FOC letter. So feel free to expect that inbound business. Don't feel free, expect that inbound business. These letters do go out. It is a requirement by TransUnion, Equifax, and Experian that there is a letter sent out in what is deemed a reasonable period of time. We've defined that as 30 days. So we always want to be fully in compliance. We beat that by about 20 days. But with a mortgage inquiry, the last thing they should get is that. And why? Why do we need to attack them on all fronts, guys? To take it back to the beginning here? Because they are working with another lender. And if you're not second, then you're going to be the 5%. You're going to be the 1 in 20. You're closing 5% of those deals. If you're third, you have to be second. So make sure, guys, you have this automation set up. And these are things we have scripting. We have this all available in our support hub, through YouTube, everywhere. At the end of the day, scripts are just talking points. We don't want to be robots. We want to be mortgage advisors, ask questions. And I'll tell you what, some of my favorite questions that LOs ask, and the successful ones that do tons of webinar content for us, they dig deeper. If someone's being short, well, I was looking to do this. Well, could you elaborate on your goals behind that? Could you elaborate on that more for me so I can help understand your situation? Could you tell me more about your goals? Asking people to expand on their thoughts a little bit. It buys you time if you're looking to pivot and you're a little unsure of what to say. Maybe you're newer developing LO. You're still getting into the banter part of it. Could you tell me more? Could you elaborate more? Or I'd love to understand your goals more fully. Could you tell me more? But guys, mortgage inquiry, attack on all fronts. An equity alert, I don't need to be spamming this person. And Mortgage Coach and Sales Boomerang, we hate spam. If someone's shopping, you need to be on them because you know Rocket are, you know that Quicken is, you know all of them are. But ultimately, guys, consider cadence always. Try different cadences. Try different things. Again, schedule the next best loan. If you got a first-time home buyer coming through, you're looking for that Alice relationship, what's next? Is it removing their mortgage insurance because they only put 3% down? Is it, that, okay, this is their starter home and they're looking to start a family in the next couple of years, they plan on upsizing. What are you projecting? What is your lender projecting over time? What are they looking at in terms of, appreciation in their area, things like that. But again, it's setting that expectation. You're going to hear from me again. We do free mortgage health reviews. We have free fraud protection. We have all of these tools to make sure that you benefit from us as a lender. We are looking for the lender for life relationship. We want to be here when you pay off your home. We don't want you to be a loan owner. We want you to be a homeowner. All of those cliche sounding things, but it's true. Set the expectation. of you, set the expectation of the next loan, and you will succeed. For my ones, for my new LOs, my developing LOs, guys, 3 simple takeaways that I've tried to compile based on, all the LOs that I get to speak with, all of the awesome producers I get to speak with. If you do these 3 things, simply put, if you're a top producer already, you might roll your eyes at me, but I guarantee this is how you got your start. And I guarantee that this is what you're still doing today. Guys, if you don't follow up on them, if you don't send the call, send the text, send the email, send the mortgage coach TCA, send the presentation, you're not going to close the loan. And you might think, well, of course not. Guys, we have some lenders that we work with. There's certain branches at times, and I'm not going to throw anyone under the bus, but I've done a training before in person because a team told me that they had 1,800 alerts in 2022. This was like mid Q2, 2022, but actually, excuse me, it was early Q3. Loan volume's down across the board, and they said they had 1,800 alerts sitting in what they were calling a pond in their CRM. 1,800 possibilities to get that conversation started with the borrower, weren't following up. You have to pick up the phone, send the text, send the email, get your CRM, make sure that with marketing and compliance, you've got these messages going out or these videos going out. Otherwise, what's it all for? It's a waste of money. It's a waste of time. It's a waste of effort. You're not servicing your, potential client base as well as you should be. Your past clients, you're not doing your best as a professional. If you can't just follow up on them, I don't know if this is the industry for you guys. Next, if you don't ask, you won't know. Neither will a borrower in most instances. If you don't ask them, hey, have you considered a 2-1 buy down? Hey, have you considered an investment property? Hey, have you considered consolidating your debt? Hey, have you considered using your equity to turn your home into your dream home? The borrower might not ever have heard about that or ever thought about it, and you won't know if that's an option for them. Again, don't typecast the alerts. Ask questions. Even if someone is proceeding with, okay, yeah, I do want to do a debt consolidation. Well, hey, have we considered a principal reduction payment? Hey, have we considered an investment instead? Hey, have we considered X, Y, or Z? All of these different options to make sure they're aware of your expertise, your products, and the possibilities that they have. Again, we want to do everything we can to encourage that borrower to shop with us. Shop, it's like taking someone into a store and saying, pick something out, as opposed to saying, all right, yeah, go, when you buy it, show me after you buy it, or yeah, when you buy it, let me know, and then we'll go look at it later, or I'll help you put it together later. You want to take them into that store, you want to show them everything on the display and let them pick in the store. Give them all the options, shop with them, guys. The next thing, guys, get closure out of every alert. And this is really my meaning behind this is we're getting these digital intangible insights, this kind of, intangible thing that comes through, this alert, this insight. And we want to turn it into a tangible, stamp signed and approved loan. We want to get closure from every digital alert. Let's take this alert, try to turn it into a conversation. When we get to that conversation, what is the result? The result is either going to be a green, a yellow, or a red in my mind. A green, I'm pulling credit. I am moving forward. I'm getting them pre-approved. I'm supposed to call. The missus has more info and she's free tomorrow night. I'm supposed to call tomorrow night or this week immediately. This is urgent action. So the urgent action, I go in my CRM or in whatever I'm using to work in. I take notes. I set calendar reminders. I send invites through Google Mail, Google Calendar invites to the borrower, and make sure that, hey, we're ready. I've got what I need for the next meeting. I know what I'm expecting. I'm organized. Green, easy. That's the easiest one to me. Then I've got my yellows, my more complicated, longer plays. Okay, I call Joe Smith. He says, all right, well, it's just the holidays. Johnny's in, soccer. Janie's playing basketball. My wife is doing church group. Work's been kicking my butt right now. I just don't have time. But I did really want to get a deck on ahead of next spring, or I did really want to, update the kitchen or whatever it is. Could you give me a call at this date or when X, Y, or Z happens in the market? Absolutely. Set the reminder, send the calendar invite, send an invite for them for a week out or a reminder a week out so that they, remember and expect a month out and then a week out, whatever you want to do. And then, what's the next step? What are you bringing to that conversation? Set the urgency in your CRM to, middle urgency or color coding it or whatever it is. Sometimes they have actual urgencies or flags. yellow, red, green, things like that in the CRM. I need to proceed at this time with this information, or call them if this happens. So you have reminders in place for it. Then you've got your reds. I used to be a junior LO. I wasn't licensed yet. I was studying young, green, and studying to get my NMLS. And I would get given lending tree leads, and I would get given names, phone numbers, addresses. I would look them up on Zillow. I would call them, and I would try and discuss the things that I was allowed to talk about. And frankly, I would get given the middle finger through the phone all the time. And that's all right. Hey, guess what? We're not going to win them all, or else we'd be retired, sipping pina coladas on the beach next week. But what was the reason? Update your notes still. Call them next time you get an alert. Put that in. You basically are clearing that out. I'm good with this alert. I'll proceed next time. I'll work on this again. They had already done a transaction that, I couldn't see yet, or it didn't work out because X, Y, or Z, or, someone died or whatever it is, so that you're relevant next time. Keep those updated notes, guys. Greens, yellows, and reds. Get closure. Ask borrowers questions. Follow up on these alerts, and you will close loans. You will help people. You will close loans. Guys, those are my big takeaways. I dropped the Mortgage Coach YouTube link in the chat for everyone here. We have thousands of hours every single week with top producers talking about how they win at open houses, how they win with realtors, how they're winning when rates are, 7%. All of these things, people that are doing over 100 million in loan volume, guys. These are the tools. This is 101 and 201. Next week, we will get into more advanced practices. We'll get into those prescriptive scenarios, which I've been offering guys for a year now since I've been in this position. If you can find something more insightful than our cash out or our rate and term alerts, I will Venmo you, I will PayPal you, I'll Apple Cash you $100. So with that, guys, go help people, go close loans. You have the tools. Use our YouTube, use our resource hub. You can go to salesboomerang.com to find more information. I look forward to seeing you guys next week. Thank you for being a great bunch that was participating. The more feedback I get, the better. Let me know what doesn't work. Come back to me. Come back to these. Say, hey, this worked. This didn't work. Marjorie, you have your hand raised. Please feel free to go ahead of here in the chat. And we also had Drew here. And Drew, you said your pre-approval application in Encompass needs to be closed for the credit improvement to work. I believe that is the case, but again, we're going to check on that for you as well. Thank you, Gregory. I appreciate that, Tim. Thank you kindly. Looking for a heart. All right, great. Thank you so much, everyone. I think Larry David said it's too late to say Happy New Year, so I won't say that, but Happy January. Now's our downtime. Go close some loans. Get ahead of those realtor conversations. Get ahead of this year. Now, get ahead of the market. Get ahead of your borrowers. Get ahead of other lenders. You will win. Thank you so much. I look forward to talking to you next week. Help people and close some loans, guys.